So we've heard the news there. We've heard about the loss. You talk about price competition in the statement as well. So how are you actually going to respond to this? Could you cut some routes and bases?
Well, we're already growing very strongly. You've seen we grew passenger numbers by 8% in a quarter to 33 million. We increased our passenger target a couple of weeks ago to 142 million. So we're going to do what we always do. We're going to have the lowest fares, we're going to have the lowest costs, and we're going to grab market share. And that's exactly what we're doing at the moment. Never been a better time for our customers. Average fare is just under €30, and we're guiding fares down another 7% over the winter. There's a huge amount of overcapacity in Europe at the moment, and I think some of that capacity comes out. Some of it's been helped by lower fuel. Fuel has dropped from $80 a barrel to $60 a barrel. So until that capacity comes out, we're going to see fares under pressure, and we're going to continue to do what we do, grow market share.
So you say you're going to continue to see fares under pressure until that capacity comes out. Does that mean that this price competition is going to actually depress your margins in the summer as it has for the winter?
Well, at this point in time, we would be, we wouldn't have a huge amount of visibility into the summer. Some of our competitors have been a little bit more bullish on summer trading than ourselves. We've about 17% of our bookings in place for the 6-month period, April to September. We're about 1% better booked than this time last year. But the trend at the moment, and I have to say you don't have a huge amount of visibility, the trend is that fares are on the way down rather than up. We're seeing fares down approximately 1% over that period of time on the same time last year. That said, we don't know what close-in bookings are going to be like. We won't know that until we get closer into the summer. But barring fuel rising significantly or some of the weaker competitors going out of business, I think overcapacity is going to keep fares suppressed for the next number of months.
Neil, good morning to you. Good to have you with us. I've written down here, Ryanair now equals almost a legacy carrier. Tell me why you're still a growth story. You've had disputes, scheduling issues, tumbling fares. That's the hallmarks of legacy. Tell me why you are going to be a reinvigorated growth stock.
Well, I can give you 210 reasons, Manus, as to why we're going to be a reinvigorated growth stock. We've got our game-changer aircraft starting to deliver in April of this year. We've 210 of them on order. That's going to see us grow from 142 million customers this year to 200 million customers by March 2024. Laudamotion, our latest acquisition in Austria, which will carry 4 million customers this year, is increasing to 6 million next year, 7.5 million the year after that, and profitable growth. So, we've got a lot of reasons as to why we're a growth story. We'll go from 15% market share to in excess of 20% market share over the next 5 years. So, as I said, 210 good reasons there.
You mentioned Laudamotion. How much of that growth that you're talking about is going to come through expanding through acquisitions if you're expecting more carriers to become available? Yeah,
the vast majority of our growth, as has been the case in the past, will be organic. We do that very well. But where we see opportunities like the Laudamotion deal to do something that helps us get into markets that we might not get into as quickly. Lauda, for example, is in Vienna. We weren't flying in the Austrian market. It gave us opportunities to fly Airbus aircraft. We're a Boeing operator prior to that. So that's quite interesting. And it opened up a number of very important slots down in Palma, Mallorca and in the German market where we're growing quite strongly. So if we see opportunities like that, we'll look at them. I don't see us being a big player in the M&A space, but what I do see is that we will manage to pick up Laudamotion type airlines on the back of consolidation that's going to happen over the next 4 or 5 years. And I think we're moving very much towards a situation similar to the US, where you've got 4 or 5 majors operating 70–80% of the market. I think Europe is a little bit slower getting there, but we're moving in that direction over the next few years.
Neil, look, there's lots of discussion around Brexit. You secured licences to fly 3 of your UK domestic routes. So you're putting your house in order. Just give me a sense of what kind of contingency planning you really are doing for real within Ryanair if there was a hard Brexit on March 29th.
Yeah, well, the 2 key issues, I suppose one of the key issues was whether flights would actually fly. That appears to have been resolved at this point in time, at least for a number of months. So as regards to securing the UK operations, we in December received a UK air operator certificate, which, as you said, secures the domestic flights here in the UK. It would also enable us to fly to what are called third countries outside of the UK, the likes of Morocco, Jordan and elsewhere. Similarly, we have a strategy in place in relation to our majority EU ownership and control. All EU airlines have to be majority owned by EU nationals. So we have a strategy which will enable us to retain that in the event of a hard Brexit. What that will involve is that our non-EU shareholders, of which the UK unfortunately will be part of that, will not have voting rights at our AGMs for a period of time and will be forced to sell down to EU nationals.
Neil, final question on M&A. Are you thinking about making an approach for Norwegian Air?
I can't comment on rumour and speculation, but I think Michael has been clear in the past. We don't catch falling knives.